Good morning, team. Thursday, the 18th of October. First off, guys, I want to thank you all for the birthday wishes yesterday. Had a really nice day. It was actually nice to kind of get away from the charts. That's a change of pace for me, but excited to get back to work with you guys as a team today. So, morning prep, always going to start with the big picture. Now, overall, guys, yesterday, the market overall was pretty lame. We saw some money continue to go into financials, and we want to talk about the Netflix move. So, first thing we'll do is take a look, big picture of yesterday. The Qs, which are set to change not too much today, made a really nice move to the upside yesterday, guys. Nice little move into the close yesterday. But then we take a look at the SPY, and once again, we really didn't go anywhere yesterday. So, though some money did come back into the market in different areas, it wasn't so much a rush of capital flowing back in across the board. However, like we observed as a team a few days ago, on Tuesday, we saw a very nice increase in volume here in the financial group, particularly in the individual names such as JP Morgan, which saw some decent volume on Tuesday. We saw Goldman Sachs with some nice volume coming in here Tuesday, and so on and so on throughout the various financial names, guys. So this is kind of when you're looking for swing opportunities, ideally what you hope for. Some environments you're going to get a move that lasts days upon weeks, or environments like we're in right now, you're going to get moves more so like this. Short little 1, 2, 3 day moves, but again, guys, these are all kickstarted by volume. So had you followed that big money into those financial stocks on Tuesday, yesterday would have been a very profitable day for you. Yesterday we got what we can call follow through. So over the next few weeks, guys, this is one term, especially for you newer traders, going to be important to get familiar with. Follow through. What follow through just means, nice and simple, is the buying that started, one session continues into the next. So you see this move back here in Bank of America, big day of volume, and then you got follow through. That was enough to continue to move for another few days. Same thing over here. You had one day, then a second day. So yesterday was a very profitable day for anyone who had a financial stock because of that follow through. Now let's just keep in mind that the overall market isn't very supportive of a nice move anywhere. However, this is ideally what we're looking for. So we've been having the discussion about, follow the money, how we find these opportunities. This is ideally what it looks like, guys, in terms of what you're hoping for the next day. This is what we didn't get out of the marijuana stocks. We didn't get a day of follow through buying. We actually got some selling the very next day. So that ideally is what you want to see when you're looking for an opportunity to put some money to work. You want to see the next day have that continued volume coming on in. So financial sector, guys, yesterday was a nice move. And even on, a 2-day period, it's a good example of how following the money can lead you towards the easy trades. Technology was kind of messy yesterday. Anyone taking that bird's eye view, focusing on the bigger picture, they're going to see financials, and that's where they're going to go like a magnet yesterday. Of course, another headline from yesterday was Netflix, guys, and this is why I don't like to mess around with earnings trades. However, there are going to be a few nice opportunities coming up here for Netflix. But here's kind of what happened yesterday with Netflix. And here's just why, in my opinion, the earnings trades can be so volatile. Huge gap up higher yesterday morning, guys, for Netflix. That's a big time move right there. A big gap overnight. However, pretty much from the onset of the day, we did nothing begin to trade lower and lower and lower. I'm not a big fan of getting involved in trades, the day before or the day after earnings, guys, because there's just so many opinions. Big money is just, shifting so many things around. It's a very volatile time. What I like to do is, avoid getting caught up in this huge turn against you right here. Avoid things of that nature. And what I would prefer to look for is kind of a bigger picture setup based upon what happened with earnings. And what I mean by that is we take a look here at the daily chart. This drop over here was Netflix's last earnings report. Their last earnings report, they dropped lower, and yesterday they bounced higher. However, this, 387-ish level was something we talked about yesterday morning as what I think is going to be a key level for Netflix. Now, we discussed, two possibilities yesterday that, one, Netflix could power higher and break through that and begin a really nice move, or just kind of stay stuck below that level. Despite a nice earnings report, despite the nice pop overnight, Netflix continues to be pinned below this level. So what is the trade set up for Netflix going forward, guys? I'm looking for a breakout above this 387 level. Now here's the beauty of this. Here's how we can prepare as traders. These are what my notes look like right now. In my notebook, I have this. In one section where I put, potential trade ideas. Netflix BO, which for me means breakout above 387. That's it. That's a really simple little note that takes 2 seconds to type. However, the next few days and next few weeks, I'm going to be showing up every day, guys, looking at my notebook and just seeing, Netflix breakout above 387. The beauty of that is that I'm now prepared. I have a trade in the lineup, and all I need to do is just wait for that trade to hit that level and execute. Simple things, but this is what consistent traders do and what inconsistent traders don't do. They're going to watch Netflix, but they're going to have no real plan. Should Netflix come back up to this level sometime over the next week or so and break out, I'm not going to have to ask myself any questions. I'm not going to have to, should I get in now? Am I too early? Am I too late? It's like, no. You had a game plan on paper. To remove emotions from trading, we just got to simply show up and execute on that game plan. So what I want to talk about this morning, guys, other than, the typical big picture we run through, is putting together kind of, upcoming setups, potential trades on our watch list. Obviously, using the follow the money approach, we can identify the groups or individual stocks where money is going the most. But that's more so something that happens in the moment, and we just have to react as it happens. One of my favorite ways to, plan trades and prepare and, kind of put trades in my playbook, if you want to call it, is just by looking at major levels on the charts. So kind of clear as day right now for Netflix that this is the box it's trading in right now. Not really threatening to go any lower than that level right there. However, again, after that earnings drop, we just can't seem to, get above that level. So taking a big step back here, Netflix is just kind of caught up in this box right now. This is like a ping pong table, bouncing back and forth in this tight range. I suggest each of you takes out your trading notebook, whatever you put your notes on, and write this: Netflix breakout above 387. That's a potential trade that is now in our lineup that's not going to require any emotion. I know every little detail of this trade, and this is the focus for today, guys, in the group, along with the live trading and all that, is putting together a game plan for a trade. Emotions come into play for your average trader during that part of the process, and that's where they get screwed up. On this move here on Netflix, what I've got here in my notebook, guys, there's no mystery for me. I know when I'll buy Netflix, when it breaks above 387. I know when I would exit the position for a loss if it falls below 387. I've got the details of every part of this trade on paper. How can I screw that up now? I'm literally going to be sitting here with this game plan on paper, and again, we need to take faith in ourselves that outside of market hours, we're in a clear state of mind. And when we're putting together our game plans, we're doing what's in our best interest. I know it's in my best interest to just attack Netflix based upon what I'm seeing on the chart. And putting it on paper, guys, is going to allow me to be like a robot and just simply execute on the game plan we put together. So that's a nice potential trade coming up soon for Netflix. That really could be a pretty big breakout, in a move back towards the 400s. I think that would be really interesting, and that's something that I look forward to participating in myself. In terms of simple ways of finding trade opportunities, guys, we're going to jump into a lot of different setups, a lot of different things of that nature. What I want to talk about today is just something very simple. We talked about it a little bit, a few of us the other day. Indicators. The kinds of things we can have on our chart that help us pinpoint, bigger moves and things like that. As a general statement, guys, I keep my shit clean. I don't like to have a messy chart. The major thing that I focus on, and what we're going to talk about today, in terms of swing trade ideas, is the 200-day moving average. The 200-day moving average is considered a key indicator by traders and market analysts for determining the overall long-term trend. The price level in a market that coincides with the 200 moving average is recognized as a major support if the price is above and resistance when the price is below the 200 moving average. In plain English, guys, what the 200 moving average is that it's a moving average that is essentially showing us, the average movement for that given stock over the last 200 days. What you're going to notice is that strong stocks typically tend to stay above their 200-day moving average. This red line right here, guys, is the 200-day moving average. You're going to see as a general statement, strong stocks in the clear uptrend will break above that level. Netflix just recently broke below that level, which is the trade setup that we're going to talk about today. But let's just look at a few more charts and kind of get a feel for this 200-day moving average. This will give you guys a gist of how strong Amazon has been. Last time Amazon broke its 200-day moving average was February of 2016. So, 2.5, 3 years ago was the last time that Amazon even went below that level. And you'll see it stays nicely above the 200-day moving average. Apple has been a very strong stock for our market, has been nice above its 200 for a while now. It broke below here a few times. However, this is such a simple, easy indicator to monitor, team, but it's such a key level that it can really be some nice, it can create some nice trade opportunities for us. One of my favorite trades, which is very simple, is just playing a move above or below that 200-day moving average. Again, I use the same follow the money, principles to tell me when it's time to take that trade. But one of my favorite things is a breakout or a breakdown above or below the 200-day moving average. We'll flip back here to Apple recently. As soon as Apple breaks below that level, which again does not happen much, I immediately am looking for one thing. A breakout day back above the 200 on strong volume. This is an incredibly accurate trade. The win rate of this trade, guys, is sometimes pretty crazy, and it can result in some pretty powerful moves, especially with the options. So I particularly remember this trade, and it was a fun little 2-day trade. Apple broke back above its 200-day moving average. So, this is pretty impressive. It broke below this major level and quickly found some buying, but I'm looking for the breakout day back above the 200 on big volume. You see how that breakout coincides down there with that big volume day? That's a nice move to the upside. Apple again fell below that level and was pinned. We want to take that breakout trade above the 200, it remounts that moving average and follow that big money. I took that trade as well, and they're very enjoyable. So what we can do during times where the market has been experiencing this kind of price action lately, here you go, guys. The market itself ended up dropping below the 200-day moving average. What would a nice play have been? Taking the breakout back above that 200, following that big money. But when we're in a situation where the market has been getting sold off lately, of course that causes a lot of big name stocks to make some pretty, decent pullbacks. What I love to do during times like this, and it can often, put 4 or 5 potential trades, on our game plan list, is look at the leading stocks, some of the bigger stocks in the market, and see if any of them have broken below their 200 and are potentially setting up for that breakout play. So, Netflix, we're a little late there, already had its breakout back above the 200, and you guessed it, it happened on nice volume. So, Netflix, the trade we're looking for is that breakout out of this box. Flip over to Apple. Apple is nice and healthy well above its 200 day. This isn't a trade we're going to be seeing in Apple anytime soon, unless shit gets really ugly. We can forget about Apple. Amazon, talked about earlier, nowhere near its 200-day moving average at the moment. Don't need to worry about that there. Google. Again, we're just looking at big name stocks here, guys, looking for this setup. Bingo. Here's Google below its 200-day moving average. What do we now do with this? We identified a stock below its 200. What is the game plan? Well, assuming we want to go long and we're looking to buy Google, here's a simple game plan, guys. Put this in your notebook. You put your ticker and then just a general game plan. What are we looking for here in Google? Breakout above 200-day moving average. That's it. I know that seems like that's the preparation you go through to trade. But guys, we're going to be heading into the day, this is just a great example. We're putting together an actual, watch list this morning for the technology stocks. These simple little exercises are going to put together 3, 4, 5 opportunities. And by nature of what we're looking for as a team, these are 4 or 5 low risk, high reward opportunities. The goal for us, team, is to show up every day with a handful of these on our list, in our playbook, and then we just literally, like robots, execute on the ones that present themselves. When are we going to trade a breakout on Netflix? When it breaks above 387. And we can just sit here and wait for that. What are we looking for in Google? A breakout above the 200. It is as simple as that. We don't have to ask ourselves any questions. How's Google looking? What should we do here? No, we got a game plan. And when Google breaks above that 200 on big volume, we're going to follow that. We're going to take that breakout trade. So in terms of us beginning to put together watch lists and executing on, every aspect of that potential trade, write this one down in your notebooks too, guys. Google, breakout above the 200 day. Now let's move on to some other names in the tech world. We can look at something like, NVIDIA. And there we go. Again, that big red line is a 200-day moving average. Well, here's NVIDIA. We closed here yesterday. We've tried a few times, but NVIDIA is now pinned below its 200-day. What do you guys guess I'm going to write in my notebook right now? Nice and simple. NVIDIA, breakout above 200. Very simple, but I'm prepared now. We're set to open up about 246.32-ish today. That's not going to quite put us at that level, but, this is the preparation, guys. I have in my notebook my game plan for NVIDIA. Now we're sitting here this morning looking at pre-market action. Nice little change. NVIDIA is supposed to open up about 1% higher this morning. Guess what? We want to pay attention to that and be prepared to execute like robots on that breakout trade. So there's the third potential tech trade. We got that Netflix breakout above that key level. We're looking for that breakout above the 200 on Google. We're looking for that breakout above 200 over here on NVIDIA. We're just going to follow the money, but we're identifying the key levels that we want to play. So we'll look at a few more names in this group. Facebook. Facebook, guys, is way below its 200-day moving average. After this dump recently, after its most recent earnings report, it has just been pinned below this level ever since. However, to give you guys a gist of what we're looking for in Google and NVIDIA, see how Facebook broke above the 200 here and kind of moved for another day or so on big volume? That's the trade. Take a picture of that visually in your head, guys. That's what you're looking for on Google. And that's what we're going to trade. This is what we're looking for on NVIDIA. And that's what we're going to trade. Going back a few days ago, that's what you could have been looking for over here in Netflix, breaking above that level. So back to Facebook. Facebook is nowhere near its 200-day moving average. Not likely to make a move up to that level anytime soon. We can ignore that. Looking for specific setups, guys. If you're just searching for, plays based upon the 200-day, there we go. we can set aside we can set aside Facebook. So this is something we're going to continue to do as a team, putting together, a playbook. A playbook is just basically our notebook, our journal, chock full of potential trades for us to just execute on. That's how you reach the point where your consistency is wonderful. You look at something like Alibaba, way below its 200-day moving average. That's not going to be a trade we're looking for anytime soon. So, but if you do go look back at the 200, you're going to see this trade kind of pop up. And it's super obvious when it does. So, with that being said, guys, today, tomorrow, and heading into next week, we're going to focus on so many things in this course, but this over the next few days is kind of going to become our focus. I hope each of you has a notebook. If not, 25 cents at Staples, guys. Go grab a few of them. And we're going to begin to physically walk through every step of the trade. What I mean by the trade is, let's look at Google. The first part of this potential trade is me identifying this level. That's the first step, is identifying the setup. The second step to trading Google successfully is putting together a game plan. There's our game plan right there. Really simple, right, guys? The next part of trading Google well is going to be, executing when it's time to execute. Taking our entry like we've designed when we should. Taking our exit like we designed when we should. All of those things is what makes a good trade. Not just buying a stock and selling it for a profit. It's the overall structure and big picture that we take. This is our business, guys, and these setups right here are potential business opportunities for us. That's the way you got to look at it. So if you guys are running a business and you have a nice potential, a good potential meeting or a good potential engagement coming up, you're going to prepare for it. Well, how come so many traders lack preparation? Yeah, we'll trade Google and it looks good, Yeah, when Nvidia's moving higher, we'll take it. That's not preparing very well, but here we are as a team in this 10-week course, and we're going to be able to go to bed at night, and when we put our head on the pillow, literally visualize and see the trades we're looking for. Despite being a little hungover and exhausted today, last night I visualized Nvidia breaking above that level and me taking the breakout trade. I visualized Google breaking above that level. I see myself with my game plan taking my entry as I should. I see my profit loss immediately start to climb. Traders who don't have a game plan, who don't have set, notes, who have no set structure to what they're looking for, they can't do these kinds of things, guys. Again, 90% of people fail because they just take a piss poor approach to trading. We want to be prepared. We want to be like, that top football coach who just has a playbook chock full of opportunities where he can apply them when necessary and kick ass. So next few days, guys, that's going to be our focus, is creating and putting together a list of, a full plate of opportunities every day. And the bigger picture of trading, guys, is that you learn the game, you master the concept of how this all works, and then you find a few setups, a few trades that work well for you and your personality, and then your job is to literally become as good as you can at that given setup. And then all your preparation every day goes into preparing for that setup. These are the things that most traders don't do. So, excited for today's session, guys. I will see you in the chat room in a little bit. Going to try to get a little bit more sleep and recover from what honestly wasn't a crazy birthday. I just have a very weak stomach. So, I'll talk to you guys pretty soon.